know the consumer's in great shape here, but we also know that nearly everything's connected to the shopping mall or the shopping center. Well, let's just say some of them become zombies. So where are people spending their money? Well, how about at open-air shopping centers? Take Brixmor Property Group, a real estate investment trust that owns more than 400 of these shopping centers across the country. Well, they got some terrific anchor tenants. TJX, we like that very much. Ross Stores, another of our believed. Kroger, just the other day, fantastic quarter. Walmart, best in show. Just last week, Brixmor reported an excellent quarter, which is one of the reasons this stock has been able to rally nearly 50% for the year, while the mall REITs have been, let's say, treading water or going lower. Plus, Brixmor pays you a bountiful 5.3% yield, which has allowed it to stand out. I think it's got more upside. Do not take it from me. Let's dig deeper with Jim Taylor. He's the president and CEO of Brixmor Property Group to find out more about the quarter and his company's prospects. Mr. Taylor, welcome back to Mad Money.
Thank you, Jim.
Good to see you, sir.
Good to see you. Appreciate you having me.
Okay, so, Jim, one of the things that you guys did that others haven't is you decided, you know what, we're going to take the darn hit. We're going to get out of, I'm going to use your term, the non-relevant retailers and get into the relevant retailers. And you're pretty far along in the transition.
We are. We've just over the last couple of years had over 12 million of new leases with tenants, as you mentioned, in the open who are actually thriving today. And so some of this disruption has actually been a great opportunity for us to upgrade our tenancy in the open air business, which generally still is thriving and doing pretty well.
Now, a lot of that, how many of your companies can you let's say, check a box and then pick up at the store? Because if you're going to a shopping mall, BOPUS, so to speak, buy online, pick up on store, doesn't work.
Well, it works in the open air center. We dedicate a few parking spaces right out in front of the store. And the retailers who get it, who really understand how their customer wants to be served, do a great job at it. And they're seeing growth in their sales through it, whether it's Kroger, Walmart, many others.
Now, you do have to explain to people, because I don't know if they get it, that when you have a tenant that's an old tenant, people say, oh, boy, that guy could really be hurt. That's going to, a scene, okay? And they're nice people. We've had them on. They're going to hurt that sector. It's possible that was written at a very below market rate. And after putting a little bit of money in, you can get that space leased for a lot more.
In real estate, rent basis matters if you want to make money. And so when you come into a period of disruption, as we are, and you have reasonable rent basis, and you can increase the rent and still offer a tenant a reasonable cost of occupancy, that's how you make money. Right. And not only how you drive growth in your cash flows, but it sets up wonderful opportunities to creatively reinvest in these shopping centers and make them more relevant to the communities they serve. And we've been doing that very actively.
Now, for instance, I know this Plymouth Square, which is really about 2 miles. I used to ride my bike there. And I see you bought that, and I look at that property and say, geez, maybe some REIT operator didn't have the money to reinvest, didn't have the ability. That's a great property. Are you picking off some good properties from other companies that kind of have to, let's say, clean up their balance sheet?
It's a really great question. And, you think about our space, most of it's in private hands. The REITs only own about 10% of the shopping center stock. Okay. So with that center in particular, we saw a 70% occupied center where we knew what the national tenant demand was to be there. And so we're real excited. We actually own the center catty corner to at White Marsh, if you know the area.
Oh, sure, because I played Plymouth White Marsh was our primary, that was our rivalry.
Great center, yeah. And we're going to be adding a nice out parcel there as well.
Now, I know you do have still have some Rite Aids, of which I'm worried about, still have some Ascena, which I am worried about. What do? Let's say Ascena called you and said, and it's mentioned somewhat in the call, but say, look, we need a break. You don't really have to give them a break, do you?
Not where our rents are.
Interesting.
Not where our rents are. So the discussion is much different. If you're sitting at above market rent, which we occasionally are, right, it's a much different dynamic. But you say, we'd like to have the space back.
Wow. And I mean, these are people maybe your firm has had a long-term relationship with. You're willing to take that gamble?
Absolutely. Absolutely. Because, at the end of the day, we want to make sure that we're bringing in the use to the center that's going to be most relevant to the community that we're serving. And if they're not doing great sales in there, it's really not helping the overall center and the dynamic there.
Okay, so the actual occupancy rate, there's a couple of them that I see. There's some that I see a number that says 91.9.
That's overall.
Right. Now, that also is not necessarily a negative, correct?
Well, it shows that we have room for growth. I think the stabilized occupancy level for this portfolio, as we continue to execute our plan, is quite a few hundred basis points above that. And really going to be most driven dramatically in our small shop vacancy, which Today, our occupancy sits at 85%.
Right.
I think you can see that over the next couple of years trend closer to 90, particularly as we bring in more relevant anchors, which is part of our strategy. When you look at our reinvestments, what you're really seeing is us putting a new anchor into the shopping center and the return that we're getting from that. But we have behind that, Jim, the small shop lease up that occurs with better tenants at better rents.
One last question. How many properties did you dispose of during that period when you said, you know what, we're going to bite the bullet?
1.6 billion, over 100 shopping centers.
Jeez.
And we did it one at a time. And the reason we did it one at a time was that was where the liquidity was in that market. It was something that I worried most about. Would we be able to cleave the portfolio? But we did well.
Well, congratulations. I mean, look, as I was saying to you off camera, I feel it's a shame that all REITs kind of trade together as a group, but some people are in a different trajectory.
Well, just watch us continue to execute.
Oh, I know.
We're real excited.
I know you will. Okay, that is Jim Taylor. He's the president and CEO of Brixmor Property Group. You always say there's no yield, no safe yield. A little bit better than 5%. I'll take that when treasuries are 1.9. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.